right. Well, show of hands. Who thinks AI is all hype? Who's brave? All right. Well, not that many. So I learned like 3 decades ago, starting off in my career, that all business is risk management, right? So you are either each side is trying to push as much risk off to the other. I think it's interesting because Michael Markowski, who is the founder of AlphaTac, you have a lot of insight into this, and it's going to roll into our panel right after this. So, Michael, why don't you give a brief introduction to yourself and what AlphaTac is? Here.
Yeah, I'm in my 50th year in the financial markets. I have, for the last half of my career, I've been doing research on extreme events, both long and short, and I use my research to develop algorithms to predict the next event. One of my classic algorithms was the work I did on Enron. After Enron collapsed, it was the largest corporate bankruptcy in the United States. And Fortune had named it for 7 years in a row the most innovative company in the US. I did an autopsy on it, found the cause of what would have told me it was going to collapse, and created an algorithm and started predicting collapses of dozens of companies. And lo and behold, 6 years later, all of the brokers, including Lehman, showed up with the exact same symptoms as Enron. So my algorithm put a sell on them, and I put an article out that was available on newsstands at LaGuardia Airport, LAX, Barnes & Noble. And I said, get out of these 5 stocks, there's a day of reckoning. And the stocks collapsed a year later. And so I used an algorithm, my research on the biggest bankruptcy in the United States, to predict the bankruptcy that it was even larger, the largest ever, which was Lehman Brothers. So that's what since then that's all I do. I do empirical research of the markets on the S&P 500.
And where can people find your research?
What?
Where, have you published? Where is your research?
Yeah, my research is published at alphatac.com. And alphatac.com the name is basically, it was created because what we do is we create alpha in bad markets. If you want to go from here to the UK, you're going to have to tack to get there. You can't sail on the ocean with the wind at your back. You've got to tack to get there. So that's why it's called AlphaTac.
And who did you write this research for? Who's your target demographic for this research?
My research is best for generational wealth investors, which include family offices, sovereign wealth funds, endowments, foundations, anybody who has 100-year time horizons. Pretty much is what my research is well suited for.
Great. And so right now, are you selling it? Or
What?
How do people get access? How do they get access to your research? Is it just free online?
Well, right now it's free, but the plan is, because I'm one of the few that I don't know of anybody that does what I do. I do extreme events, and I have an algorithm that identified a IPO that I underwrote that went up 1,700% and was acquired by United Healthcare. So I have algorithms that go both ways. And so the plan is right now, this is free right now, the information, but the plan is to turn AlphaTac into an institute so that we can basically, it'll be a family office, generational wealth investor subscription institute, so to basically continue on with my research into perpetuity.
I'm going to go a little bit out of a limb. Arguably, we just had an extreme event.
Yes, the menu on here says I'm going to talk about the AI bubble. I talked about that at the Dubai event in February. And I did all the research, so I researched all the bubbles, and we are definitely in an iconic AI bubble. But now my deep concern right now, I'm very concerned for the world, because there has been an extreme macro event for the first time in the history of the world, and it's going to do serious damage, and I believe it's going to be the cause of a serious crash, the biggest one we've seen since 2008, and it's going to cause the third Great Depression in the United States and the world.
Can you go a little bit more on what makes this the first extreme macro event in the world? I mean, people are going to argue World War II was an extreme macro event.
Well, here's the problem. Oil, there's been a symbiotic relationship between oil, the stock market and the economy since oil was first drilled in the 1800s. And what's happened is, so it's a cycle. And so typically what happens is an economy will, after a recession, will start climbing. Stocks climb with it. The economy, it goes all the way up, continues to peak, peak, peak. After the economy peaks and oil and stocks peak, oil always follows and peaks after them because of the demand for oil. So when oil peaks, that puts pressure on the profit margins of corporations because everything's manufactured with oil, with petroleum products. So typically, if you look back at the last 2022 and the 2007, 2008 crashes, you will see that after the peaks, oil peaked after those two, after the market, and then the market crashes and oil then comes down and the whole cycle starts anew, where now the companies have lower cost basis for manufacturing their products and services, and that rejuvenates the market. This problem, we have a problem here because of what Iran because of what Iran and Israel and the United States are doing, and they destroyed the infrastructure, a lot of the infrastructure to produce oil and energy. And they've also done it for fertilizer. We got serious problems coming because most of the fertilizer comes out of the Middle East.
Okay, so just a reminder, this is for educational, informational purposes. Don't make any financial decisions based on any of the information on the stage today. Michael, can you share any predictions that you might have?
Well, I'm saying to you, the problem is going to be that when the market comes down, because you've cut the supply, there's both demand and supply destruction. That's never happened for energy. So what's going to happen is the market's going to come down, but the prices aren't coming down for energy, and that could cause it really has the recipe for causing a Great Depression. Now the big problem, Keith, is that we're doing this from an all-time high. We're at a stone's throw from an all-time high, so it's a setup for a 1929 style crash.
All-time high on the market or all-time high in oil?
I'm talking about an all-time high on the market. We're at a bubble high. We're within a stone's throw of a bubble high. We have this going on. It's going to be a severe crash, a decline of the market is what we're looking at, a severe.
And do you have a time horizon on that?
I think it will absolutely. I'm looking for the market to be down fully for the year, double digits for sure. Could be down. It could absolutely rival the 2008. Because here's the problem. Even if the war gets over, the infrastructure is destroyed. So the infrastructure destroyed is going to keep the price of oil and energy higher, everything higher than it relatively would have been if we hadn't had this.
Is there an argument, though, that even with the destruction of infrastructure, because we've seen this maybe not on a macro level, that the reinvestment into rebuilding that infrastructure causes other opportunities?
The problem is it's going to cost billions, and it's going to take 5 to 10 years to recreate it. It's not something you can just go out and rebuild overnight. It took them years to build it, and now it's going to take more years to rebuild it.
It's a very good point. They say that with all the infrastructure we've built up since the Industrial Revolution, we don't have enough resources to actually build up all the infrastructure again.
Right. And it's going to be costly, and who knows? I mean, if Iran's threatening to blow up the rest of this, it's going on in the UAE. They've destroyed UAE oil fields. They've destroyed Qatar. Big serious damage has been done, and that's going to increase the net relative price of oil in a downturn for the economy worldwide.
So I start off talking about risk management. Is there anything you can give as optimism in this scenario?
Well, I'm having, you can go out into the lounge, and I strongly suggest that you go look at this. I'm also have expertise on secular markets, and the market's been secular since 1871, and then it goes up for 8 to 20 years, down for 8 to 20 years, back up. And I see we're going to be in a secular 10 to 20 year downturn. So I'm looking for the S&P to decline for the next 10 to 20 years, the Dow and all the world markets. What you want to do is you want to deploy a defensive strategy, which means put a good portion of your money in bonds, a portion of your money into hedge funds, a portion of your money into residential real estate, and you want to put a portion of your money into venture capital. And I'll give you a good example of why. There was a bear market at the worst probably since 1929 to 49 that occurred between 1966 and 1982. The company that basically was born in that bear market was Federal Express. And Federal Express you want to put your money into things that are going to save or change the world.
And Michael, they can find you where?
You can find me right outside. I have all my charts out there. We have all of our charts in the lounge area out there, and I'm at alphatac.com, and my cards are over there. So yeah, you can all that's there.
Well, thank you very much. Thank you very much.
Thank you. Thank you, Keith.